Hey all, this is Raghu here. Welcome to Bro Billionaire, and I'm going to bring you another episode of great consolidation of what you learned in last 2 days and start learning tomorrow. So I'm redoing this video because my initial video went to 43 minutes, and I know if I do a lengthy videos, there won't be any viewers. So I'm just redoing it and capturing only important points as I did not have patience to edit it. All right. Now, very quickly, so before we proceed further, so I would like to share an important story. Everybody knows Warren Buffett. So Warren Buffett in 2020 had made around 84.5 billion his net worth. Currently, it's 109 billion worth. But understand, at the age of 50, he had only 3 billion, which means 81.4 billion was earned after his 50th birthday. Now, what I'm trying to tell you here is this is power of compounding. So if you are an investor, patience never ends. You need to look in investment and creating wealth. So assume you have already a capital, you have money and you're investing. So if you are a day trader, listen to this story very clearly. Say, how many of you know Jesse Livermore? Right, Jesse Livermore is considered as one of the greatest intraday trader, and before even intraday concept was there, he was trading. 1929, when the great market crash happened in US market, Jesse Livermore in a single day made around $3 billion. Not that day, adjusting the inflation to the current date, I'm telling you, he had made $3 billion. On the same day, 1929, I mean, it's considered as the Black Monday, Black Tuesday, Black Thursday. You can Google it. You will have a lot of information on that. Several investors committed suicide, right? So this person with some luck and strategy, he has betted short and he made a lot of money. But on the same day, there was another multimillionaire, Abraham Germansky. All right, he was a real estate multimillionaire who had invested all his fortune into stock market. He went missing, probably committed suicide. Nobody knows. So these are the two phases of the stock market. You need to really be very careful about it. All right. So you know our own Coffee Day Siddharth, with no due respect. He was a very powerful, very rich. Still he committed suicide. Similarly, a couple of years ago, there was a person in Pune who had taken all the personal loan and invested in stock market, and he had committed suicide. So what I'm trying to tell you here is stock market can give a lot of money. At the same time, it can also take money. What do you see here? This is my highest intraday money which I have made. As you know, I trade consistently using pivot and price action, and I make consistently 50% of my capital month on month. This has been going on for last 1 year. Now, I want to share my knowledge to make you same consistent trader. And like any other YouTuber, any other channel, we don't have any take the money and teach the course. Whatever I use practically, I'm trying to share it here. So without any delay, please do subscribe and hit the like button. Now, the amount of this money is not to self-advertisement. When I was doing it, I was hardly 5 months into option trading. By the way, I'm very young in option trading, just completed 2 years and 1.5 months now. But I've been successful in my own way. And why I feel I need to teach this is I can relate to all the new option traders who has very less capital. So I have very less capital, so I can relate to them, and you can learn from my mistakes and my experience, and you can grow along with me. That's the idea. Now, this entire amount, I lost it in 1 week. That's all the story. Got it? So there will be luck. The important story is when you make money, you need to retain it. Jesse Livermore made $3 billion with current inflation adjusted on 1929, but within next few years, 4-5 years, he shot himself because he was bankrupt. Not sure why he's still called one of the greatest intraday trader when he has committed suicide. So those are the realities which you need to keep in mind while trading. Now this is coin toss. So a lot of books have written on this. This is called as random theory. So I randomly tossed 100 times and to see how many times I win. I win around 56 times, lose around 44 times. So what I'm trying to tell you here is, even if you toss, you will not win 100%, you will not lose 100%. All right, that's all you need to know. You will not win, you will not lose 100%. So when you see this in a naked chart, don't you know which side you want to take your trade? You consider you don't have any knowledge, but you know these candles, green is buying, red is selling. When you see this, don't your mind, common sense tells you which side you want to go and trade. So that's all you need to know. Got it? Now, even without any knowledge, anything you can trade. But if you put some method to madness, you can increase the probability of winning, because trading is all about probability. Either you win or you lose. So keep aside all your fear aside and start focusing on trading. So what I'm going to teach you here is, I'm going to teach you uh, uh, very important, candlestick patterns. Now, what is this? Raghu is teaching candlestick patterns. No, this is all you need to know. And as a part of technical analysis and price action, you don't need any indicators, anything other than pivots. This is all you know. So you know this is a solid green bar where buyers are very strong, sellers are very strong. The wick is nothing but a small price ejection. Somebody booked, the sellers exited the position, creating buying pressure. The buyers exited position, taking some profit, created small tails. This is buying pressure. The selling, the first initially market went down and then buyers came and pushed up. So this is a strong buying candle. This is a strong negative candle. Keep this in mind. All right. These are all the different steps, the stages I told you. This is how the candle was, all these pin bars, how buying happened, how eventually it ended up. Now with these candles, if the body so is red, you have to wait for a green body. Keep that rule. If this is green, you can immediately buy. I'm going a little fast considering I want to cover some price action so that you can understand clearly. Now, this is one of the very important setup called as extreme reversal setup. So what happens in this setup is market is usually it's in range bound or early in the morning, say bank nifty or stock, you have a jumbo candle. Now, remember, if the jumbo candle is completely morubozo or with a small wick, you have to be cautious because buyers are strong. Now here, the wick at the top will be higher than the wick from the bottom. And immediately the next candle will be the opposite candle. So suppose if it is a green candle, this will be a small bodied red candle. So what exactly the logic behind this candle is, it's called as the buyers who are so convinced to go high did not have the energy, or the new buyers did not enter to take the price up. So they did not have the conviction that price will go to a new level. So they booked the profit and a small body red candle entered along with few people shorting. This is nothing but when you see it's an inside bar. All right. But the condition for this, you need to have a jumbo bar. And inside bar also works. I'll show you. So this, when this Harami patterns forms, it's called as rubber band. Price immediately comes back to the original range. Remember this extreme reversal setup. Every day you will make money. These are the only candles you will see in the market. What you see here is, this is outside reversal setup. Market is in downtrend, but all of a sudden you get a long wick goes down and then you get a green body. So this long wick is nothing but, again, like previously, prices tries to go down, but it does not find enough sellers there to carry the momentum to next level. Instead of sellers, it finds buyers who push the price up, forming a decent green body. So when you see this, this is wick to body engulfing, not body to body. The wick to body is engulfing. This is called as outside reversal setup. It is a reversal. Why it is called outside means, first the wick goes down before going up to test the low and confirm that there are no weakness left, and then goes up. Similarly here also on the red, what do you call, selling side, Price goes up first to see whether there is any bias left. Once it confirms there is no bias left, it forms a long body engulfing the previous candle. So this is called as outside reversal. So you have reversal wicks, extreme reversal, outside reversal. The last one is doji. This is all you need to know to trade. The doji is the highest level of indecision. And whenever a doji forms at the top followed by opposite sign candle, it means here bias are going, all of a sudden bias are undecided, then you get a red body, which means these buyers have exited and few other sellers have entered. Combinedly, they have made a decision to take the price down. That is what you should understand any doji followed with the opposite side candle. Now, all these four candles forming near pivot is what makes you successful trader. Okay, let's watch each day. Starting from yesterday. This is Bank Nifty, right? So we have a very strong candle down. Not sure how many of you try to follow this. Yes, below S1 pivot, you have smart money, but I am trying to show you after this very long red bar, what do you see here? The green bar on 5 minutes. It is nothing but an inside bar. After this inside bar, another inside bar by red candle showing that this is not strong enough. Then you get a reversal pin bar forming at S2. Buy. Target S1. Did it hit? Yes. Same reversal pin bar forming at the top is a negative sign. You need to think opposite. You need to understand this. I have explained this because buyers are exhausting when it is formed at the top. When it is formed at the bottom, buyers are strong because here buyers failed to form a body, but they were so exhausted, they formed a very small tip of the body. That is how you need to understand. Now, after this, you get a solid red bar making a decision, breaking S1. What is the trend below S1? Downside. Did you made money? Yes. That's all you need to do. Price action near pivots. I am not talking about here. See, you have a reversal pin bar. Did price go down here? No, you have a lot of reversal pin bars here. So please understand, see one more reversal pin bar, but price is going up. So you need to understand where it is formed. See these two reversal pin bars. And when the reversal pin bar has a small body, it has so much of punch in it. See, this is at the bottom, you are having, this is a double bottom. You are having morning star. Doji and buyers made a decision to go up, but it failed because near S2, you had a reversal pin bar instead of going up. So after this green bar, yes, buyers made a decision, but the way you need to read it, market is below S1, below S2. Below S2 is still selling, right? Okay, let's wait whether S2 will get broken. But instead of getting broken, you get a pin bar. So you have solid. Now what is here at the bottom? The first sign is one pin bar. This is second pin bar. Then you have a very red bar showing this pin bar that we are strong. This is not green, mind it, but still it's a pin bar showing some buying pressure. Now, according to this, if buyers were, sellers were so strong, it should have gone down because it wiped off these two reversal pin bars. But instead of that, you get an inside bar. Bingo, pick it. Ride the wave. This is how you have to read. So if the same thing, if you watch on 15 minutes, what do you see here? Outside reversal, downside market going. See this one, red candle. I'll make it big for you. Inside bar. Why you need to watch 2 time frame? The higher time frame, the middle time frame. This is the trend you need to follow. 15 minutes on 5 minutes. Market went up, you scalped. Here, in this, if you're confused, when you see this one, your confusion should go away. Inside bar. Outside reversal. Price goes down first, then comes up, indicating buying pressure. Market never goes in straight line. It always tests the level and then only go up. That's the reason you see red bars. But it went in one ziff. Understood? This is, see here near the top. This is not outside reversal, but you can consider a very strong candle, but that's one other day. First, let's discuss only our price action candle. Market breaks S1, immediately forms 3 dojis and then a green candle. What do you expect? Market will go up. But if you know the trend below S1 is down, then what will you do? You will wait for S1 to break, take the trade with these candles. Now, do you have any price action here? The only price action is after the strong red candle on 15 minutes, you had an inside bar. After this inside bar, you had a red bar instead of following up. So you need to wait if the price is breaking S1, enter keeping the price above S1. This S1 is also conjunction of previous day low. If you know the foundation, if you're watching the video for the first time, please watch the previous foundation videos of candle pivots and float pivots, importance of S1 and R1 on what is the importance and how to take the trade. Got it? Now see, what is this one? You have a big jumbo candle and an inside bar. What is this? Extreme reversal. Price comes back. So you can book your profit and wait. Got it? But market is below S1. The trend is down. Suppose if you're a scalper like me, you can enter. The trend is down below S1. So you have to look only for downside trades. So here you got, what is this reversal pin bar? See here, reversal pin bar. This pin bar. So after this reversal pin bar, small head, what happens? Market goes up. Now this is how you can read the market near the pivots. Understand always near the pivots. Red bar, here a reversal pin bar, but it's a red body. If you have a green body, you have a higher probability of going up. Got it? So trade with the trend. Above R1, doji, you know, pivot itself is a support. R1, below R1 itself, above R1 buy. Goes lot of overlapping candles. Okay, this is a engulfing candle, but below. Above R1, you have two dojis, one reversal, one strong green bar. And what do you see here? Inside bar. Do you understand? Inside bar. Even on 15 minutes, it's an inside bar. Go down, scalp the points. Because below R1, pivots will guide you how to trade. So likewise, you can trade this. And also I would like to tell you, I mean, very important, I told you, I mean, this is my consistency. See, out of 10 days, 9 days, I have won. Here also some 9-10 days. November was my all-time record. 19 days consecutively, I won. But if you want to maintain that amount of consistency, you need to understand, consolidate, trade small, do not rush, understand trading is high risk. People lose their life. So do not think money making is easy here, because as per statistics, I told you yesterday, option buyer makes money 33.33%. Option seller has more, but it needs a lot of capital. It also has unlimited risk. Likewise, 95% of the investors lose money in stock market. Why only 5% make money? Because it's all about trading psychology. Trading psychology means simple. When you win, when you lose, it should not affect your mind. Keep it that way. It's another trade, other thing. So hope you understood something from today's session. Combining this, you can start trading tomorrow and you can be successful. Unfortunately, I'm in this educational video, I'm not an analyst and I'm not able to provide you any calls because of my work schedule. Otherwise, probably I could have given you some calls, but let's bond here. I will keep sharing my learnings so that you can learn from my mistakes and be a better trader. and hope I get your encouragement and more subscriptions so that I can impart all my trading knowledge and make you a better trader. Thank you so much. Have a good day, guys.